It's July 2022, and a 20-year-old kid is sitting in front of his computer looking at the stock market. Suddenly, he notices something strange in almost dead stock. While everyone is pulling out, he decides to put $25 million into this stock. A couple of minutes pass by and nothing happens. To a normal person, this looks like a lost deal. Well, just after 2 weeks, the same stock starts to touch the sky. More investors come in, and the prices go from $5 to $30. So, the kid sells all of his shares and bags $110 million in just a few minutes. But as soon as he does that, this happens. The market crashes with many retail investors as victims, and so the search for the culprit started. But who is this kid? How did he make $110 million at such a young age? And was he the only one involved in one of the biggest meme stock heists of the century? To get an idea of this heist, you first need to know what meme stocks are. The term meme stock became popular in the early 2000s. It is basically a stock that is down, but not completely dead. And then, it goes viral in a matter of days due to an online sentiment. This is a very powerful, yet very fragile market. There are dedicated online communities on Reddit, Facebook, and X that research such stocks. Once they find their target, they spread like wildfire. These communities are mostly retail investors who are fighting against big names like Wall Street. The first popular online community emerged in 2020. A subreddit with the name of r/Wall Street Bets was formed. The community was kinda sus, with much irrelevant information and strange stocks. But that's what meme stock is all about. People rush to liquidate the market, and once the masses start pouring in their own money, the investors pull out. The big shareholders get the biggest chunk, and mostly, these are unrecognized shady people. One of the most well-known meme stock examples is GameStop. In 2020, a YouTuber by the name of Roaring Kitty explained how the GME stock could be the next meme stock. He claimed that the stock could go from $5 to $50 in the coming days, which caught the eye of a famous meme stock king. However, this was not a shady investor like others, rather a loved one in the online community. But nobody knew that he would turn his back on them too. This king of stocks invested in GME, and soon the prices soared to around $500 during the short squeeze. This was a disaster for the major investors, but a lottery for the meme stock investors. Now, who was that strange stakeholder? Well, we will share that in just a moment because he also played an important role in making Jake Freeman $110 million. Jake Freeman is the kid who made $110 million off of meme stocks in 2022, but he is no ordinary kid. From a very young age, Jake had an interest in trading. His first trade was with his uncle, Scott Freeman, when he was just 13. That first wager was about $500. This gave him the taste of online trading, which would soon become an empire. When Jake turned 18, he joined the University of Southern California, where he studied mathematics and economics. But he was not a dull student. Despite being just 18, he ran for US president, collecting signatures, and also registered his bid with the Federal Election Commission. One of his friends said he wanted to be the youngest on the ballot. I didn't know he was going to be famous. He also worked at Valaris Capital Management as an intern. The founder, Vivek Kapoor, said Jake was a smart, sharp guy with a dense set of neurons that could address any problem without dogma. Later, the two went on to release research papers on debt defaults and open contracts. For now, remember this term, open contracts. After getting all that intel, Jake starts preparing for the greatest pull of the century. Jake keeps an eye on AMC and GameStop because retail traders go to these financially struggling companies and bid higher to short squeeze on hedge funds. But who are these retail traders and hedge funds? In 2021, a bunch of Wall Street traders were looking at GameStop charts. They had no intention of buying the stocks because it was declining, and they had millions invested in other stocks. These million-dollar trades are done by hedge funds. They're like traders for the ultra-rich. We're talking about million-dollar investments in minimum. Now, these sharks of Wall Street started seeing the GameStop stock increasing slightly, but nothing major. Then a spike hit, straight to $36. Now they're panicking. Phones are ringing, bids are made, and suddenly the graph starts going down. Nobody knows what happened, and the stock is back to its lowest low. Behind the scenes were retail traders. The hedge funds have been manipulating and corrupting the market for decades. Their favorite weapon is shorting stocks. They buy a couple of stocks at $40, sell them quickly to lower the stock price, and then buy again for $10. This is very profitable for the hedge funds, but it also destroys the market. So, the retail traders decide to fight back. These traders are not wealthy or have big offices. They're daily job holders trying to make some extra bucks. They hang out in Reddit groups and Discord chats. Once they hear about the meme king on Reddit, they start investing in GameStop. These retail traders figure something out. Something brutally simple. If hedge funds borrowed shares and have to return them, and they just refuse to sell, the price has to go up. They have to buy. They have no choice. And once the market reaches its peak, they pull out, leaving the hedge funds frustrated and empty-handed. And Jake knew how to cash in on such moments. He starts looking for such ailing retailers that had potential but were neglected by the hedge funds. At first, he invests in the pharmacy chain Rite Aid, but the market soars on its own, leaving Jake empty-handed. But then, he gets his eyes on Bed Bath & Beyond, a struggling company with stocks of around $5 each. So, he invests $25 million into the company. But how can a 20-year-old get $25 million? Well, Jake never discloses the name and says that he borrowed it from his friends and family, while some speculate that it was his uncle, Scott Freeman, who gave him the capital. Whatever the case, nobody's sure how Jake got the funds. On July 27th, Freeman discloses that his company, Freeman Capital Management, has acquired almost 5 million shares of Bed Bath & Beyond. But was it all just a fluke and a lucky prediction? Well, certainly not. This was all pre-planned because behind Bed Bath & Beyond was the meme stock king, Ryan Cohen. Ryan Cohen, born in 1986, is a self-made Canadian millionaire. At 15, he started his first online business for e-commerce sites. At the age of 25, he founded his first company called Chewy, which would soon become the #1 pet retailer in America. In 2013, 2 years after founding his company, he got an investment of $15 million from Volition Capital. In 2016, the company became the #1 pet retailer, and the sales were close to $1 billion. In 2017, when the company went live on the stock market, PetSmart acquired it for $3.35 billion. This became the largest e-commerce acquisition of all time. But all of this sounds too good to be true, right? A 25-year-old making billions in just a couple of years, because behind the scenes were some other people. The biggest breakthrough came in 2020 when Ryan Cohen announced that he would be investing in GameStop. He and 2 of his executives at Chewy joined the GameStop board with a 10% stake in the company. But in the curtains were retail investors. Ryan Cohen had a strong following on social media, and people hailed him as the meme stock king. His previous investments were a success for the retail investors, so the subreddit r/Wall Street Bets joined their king, and the prices skyrocketed to the moon. GameStop became a success. The retail investors got good money from the short squeeze, and they won against the hedge funds. But Ryan didn't sell all of his stocks because he was planning for something even bigger. In March of 2023, Ryan got his hands on some open contracts. Remember what we said previously? Open contracts. Well, open contracts give the investors a right, but not an obligation to buy a specific stock at a specific price at a specific time. This is basically gambling for the rich because these contracts have an expiration date. In simple words, let's say Tesla stock is $200 today, but you don't have any investment to buy 100 shares. So, what you do is buy a contract that says that you can buy the Tesla stocks at $250 within 30 days. If the price shoots to $300, you buy at $250 and get the profit. In this case, Ryan had open contract call options which would expire in 2023. He then announced that his company, RC LLC, has acquired 10% of Bed Bath & Beyond. The r/Wall Street Bets got wind of the short squeeze and tried to turn Bed Bath into the next GameStop. But for 2 months, nothing happened. Then came July 27th, when Jake Freeman announced his 6% share in BBBY. At the time, BBBY was drowning in $3.2 billion debt with only $107 million to spare. And Jake bought it months after Ryan Cohen, so we don't think this was a fluke. Jake also announced the investment on purpose and started discussing more about trading on Reddit and Discord chats. This was just a manipulation tactic to squeeze the retail traders to buy Bed Bath, and surprisingly, it worked. In just 2 weeks, the unexpected happened. Ryan Cohen's meme traders were pumping the stock. The hedge funds were just looking at it, and to protect their position, they started pouring in more money. On August 16th, the prices soared from $5.5 per share to $27. Some sources claim that it was $30 by August 17th. Jake Freeman was looking at his phone as the prices shot up. Without thinking twice, he sold all of his 5 million shares at $27, bagging in $130 million in revenue with $110 million profit. Soon after, the one man that people believed in also turned his back, and Ryan Cohen also announced that he had sold a stake in the company, bagging in almost $68 million. These people closed about $180 million in just a matter of minutes, and after the dump, the backlash started. As soon as they sold their shares, the stock went from $30 peak to less than $11. This was not a win for the retail traders, nor for the hedge funds. The retail traders bashed Jake Freeman on his Reddit post, saying, "Paper-handed bitch. F this dude, please leave. You signed off wrong. I think you meant to say sincerely fake Freeman." And a bunch of comments, all filled with hate, were now calling the teenage millionaire fake Freeman. According to Freeman, this was a 6-month play, and he never expected it to be this sudden. But the Reddit and Twitter posts show a completely different story. A Twitter by the username JC Oviedo showed the complete timeline for Jake Freeman. On 20th May, he registered his company in Wyoming. On July 13, 2 weeks prior to the investment, he registered FCM BBBY Holdings LLC, but this time with a different phone number. After the filing, the FCM BBBY LLC told Bed Bath how they can cram their debt. But when the stock shot up, they amended their 13G filing. On August 8th, Jake registered another company with the name of FCM MM Holdings LLC, but this time, not even his address was the same as earlier. Sounds pretty strange. Jake started deleting comments on Reddit. In a now deleted comment, the user Dr. Buddy said that Jake Freeman is trying to do these AMA just to cozy the retail investors. But in reality, he used the Reddit community for his personal gains. He is actually trying to separate BBB from BBBY so he can buy the stocks at a cheap price due to debt leverage, and then do exactly what he did with Bed Bath & Beyond. Jake Freeman is not your friend. When one of the users called Jake out for his loan to own debt takeover, he completely dismissed the statement, but Dr. Buddy clapped, asking why he's trying to get a hold of Bye Bye Baby, which is BBBY's most important asset. Soon, the comment was deleted as well. Well, ultimately, the debate over Jake Freeman's trading strategy has raised many questions about his personal ethics. But it definitely was a trade that stunned Wall Street and made a 20-year-old a millionaire overnight. Was this just genius-level analysis, or did it have the hallmarks of a sophisticated pump-and-dump scheme? Want to see more events explained in 3D? You know what to do. Like, subscribe, and share this video to help us deconstruct the next story.